Gold has just hit a record-breaking high, and while the market's cheering the big miners, a group of ASX gold producers are quietly starting to see their share prices take off. Better yet, most people haven't even noticed. At Wealth Within, we've guided investors for over 20 years with our government-accredited share trading education to take advantage of market cycles just like this one. So today we're revealing the hidden ASX gold stocks that are shaping up for massive growth over the next year. And we'll also break down why this bull run still has room to move and why the real money being made right now is in a specific type of gold player. I'm Dale Gillham, joined by Wealth Within Senior Analyst Janine Cox and Philip Tortevsky. Good evening, team. How are we?
Pretty awesome, thanks. And yourself?
You're always awesome, except when you're not. How about you, Phil?
Yeah, great. The weather's getting better.
Yeah.
Markets are flying.
You look like you've had some sleep, which is good too.
I have, yes.
Yeah, new babies,
For a
not much
change.
sleep, yeah. All right, well, let's get straight into it. Gold's just broken into uncharted territory. So do you think this rally still has momentum, or are we reaching exhaustion? Now, I'm going to ask you, Janine, first what your thoughts are.
Yeah, I guess it depends on what camp you're in. However, if you just look at the data and consider that the biggest buyers are reserve banks and they're still buying, and the forecasts are that they will continue to buy into next year.
You're talking about sovereign banks? Or
Yes, sovereign banks, and so that should continue to push up the gold price into next year.
All right, what about you, Phil?
Yeah, I mean, look, I think right now, as Janine said, that's the big one. We're also coming into an easing cycle. We've seen it out in the US. Back home, we've cut rates 3 times this year, surprisingly. Not many people thought that would be the case. So, yeah, I think right now there is a bit of stability coming into the world as well. So that might play into things. Obviously, we've seen Hamas or Israel and Palestine supposedly get to some kind of peace deal for now. So that might play a little, but I think, yeah, the overriding central bank buying and where the world's heading.
All right, so we're still bullish on gold. Anyway, we've seen the major gold stocks surge, but are the next big wins now sitting with the smaller producers who haven't yet been re-rated? Now, Phil, I want to get into some of those stocks because they're sort of the stocks that you like.
Yes, I mean, we've seen the big miners obviously fly. It's these second-tier producers that are starting to see their profit margins up almost 40%. I mean, double their 10-year average. And so that obviously is going to flow through the earnings, and then as the earnings grows, the market cap grows, they will get higher and higher above the list, and then re-ratings get pushed into bigger indexes, bigger capital flow from institutions. It all starts and snowballs. So I think that's where their opportunity is now. They haven't taken off as much as the big gold players, and so therein lies the big growth.
Well, it is, because it makes sense. With a smaller player, their cost of production per ounce of gold is probably higher than some of those big players. So with higher prices, it means there's profit margin in it for them. Yeah,
especially as you said, you've got to dive in and have a look how profitable they are. But I think the numbers were something like every 10,000
ounces,
rise equals to 30% rise in the EPS or something like that. So it's an interesting number, but as long as the gold price keeps ticking up, the growth aspect for these small miners becomes ever bigger.
All right, well, fantastic. Now let's get straight into our first lot of gold opportunities. I'm going to throw that one to you, Janine.
All right, let's have a look at this one. On your screen right now is Emerald Resources. Now, this is there's a mine in Cambodia. It's low cost, profitable producer. So we've seen a stellar run in this particular gold stock. But look at it, it's only $5 and it's breaking through its all-time high, which is just amazing to see. There is a small gap there on the weekly chart. Doesn't mean it will come back. These types of stocks may not. But I'd just be watching that. Obviously have some good rules because it's literally just come straight off this bottom. From a technical trader's point of view, you'd be wanting some more solid entry and perhaps a retest, even if it breaks through a bit higher, just a retest of that breakout. But it's looking good. As Phil says, a lot of these smaller miners, they've now got to justify these highs. But if we look back here, we can see that back in 2007, it was trading at around the $4 mark. So it's really only got appreciated by around $1 from that point, which is just incredible. So that could mean more value, possibly above $6 to come.
It just doesn't look like it wants to stop, does it, Phil?
No, and the key here is, I mean, a lot of the gold stocks we are going to look at are the producers because you've got obviously explorers, producers, refiners, but it's the producers that get the best growth when we are seeing an appreciation in the underlying gold. So when you look at this one's profitable, and that's why the share price is doing what it's doing. It's low cost, profitable, riding on the back of the big gold price. But like Janine said, to me, this is the key. When stocks break out to new all-time highs, there's always that unknown, right? Is that price accepted? Is there value there? And when you see what happened at $4 once it broke through to that new all-time high, where are the sellers? It's literally accumulated and fell to price agreements at a new all-time high, and now it's doing what you would expect after a period of consolidation, breakout.
So you're thinking it's, like Janine said, it might have to come back a little bit before it goes further on, or you're just saying it's going to keep going? I mean, 8 or 9 weeks straight up.
Yeah, definitely. There is that gap that might push the stock back through. But when you look at this weekly chart, you can notice the volatility is starting to increase, meaning it's starting to look to expand now. So with these gold players, if we go throughout history, no trend or sustainable trend is ever formed without pullbacks, let's be honest. And right now we've had 9 straight weeks up. A pullback would be nice, but I am seeing big volume come through as well. So I wouldn't anticipate any major pullbacks if this is another expansion.
All right, well, take us into the next stock.
All right, next we have Horizon Minerals. Now this is another one. It is a small-scale mining around Kalgoorlie, which I believe is home in Australia.
Kalgoorlie is
Kalgoorlie, there you go.
In Western Australia.
There's my geography right there. Fantastic. But what's different about this one is it hasn't taken off. And that's what I like about a lot of these stocks we're going to get into. We've got amazing stocks coming in even after this lot. But this stock here, you can see it just come off a major bottom, December 23. And look how nice price is the way it's curling up. We're starting to see those higher bases be respected. We've literally broken out over the last month. So part of me says, all right, it's definitely going for a bit of a run right now. Momentum is up. If I can just get this line through here. I am watching the resistance at around 1 cent. That is something to be mindful of. We're almost there. But more than anything, if I zoom this weekly chart out and bring that out, you can clearly see what's different, right? Look at the volume. It's huge.
It's big difference, isn't it?
It's huge. And we're seeing big volume coming with a major bottom and starting to break out. So this is one, like all these stocks, I think the most important thing is knowing your price analysis and knowing the stuff we show here in terms of getting the timing right. Because you said it before, they are volatile and they do move. So you get the wrong timing on these stocks and you can really get punished depending on where you place your exit. So
the other question is often when you're seeing something like gold or another materials type of producer, they can be very cyclical, meaning they're just going to go up to a level and then they'll come back down to another level. Because obviously if the gold price starts tanking, then we're going to see these guys come back down again to pre-levels that it was on. Because we saw that on that stock, didn't we?
Yeah.
How it wasn't, it's basically been sideways. If you look at it for 20 years, you could have bought it 10 or 15 to 20 years ago, the same price you're buying it now.
Yeah.
So these are shorter term plays at the moment, or are you thinking they're more medium term?
Look, I mean, it also depends on the way the gold price is likely to head. There are reports now that they're saying 5,000 is likely. And
you never know.
Yeah,
a lot of uncertainty in the world, and everybody goes to gold when there's uncertain.
I don't disregard it, and I mean even the debt situation that out in the US, talking about re-rating
the gold price.
Which we're not going to get into that here, but
cool.
Big opportunities, yeah.
All right, Janine, next one's yours.
Next one, okay. What have we got here? We've got Rox Resources. Now this is partnered on. Don't ask me to pronounce that. You can read it for yourself.
You and me.
Project early production stage. So this could be a good opportunity for those who like that lower end of the market. It's only 55 cents at the moment, but it has been trending up beautifully. It's just broken a short-term high now. These are the sort of classic consolidations that as a trader you're looking for to see that it's found support, which it did under 30 cents, but it went sideways for a few months before it actually managed to break up. The ideal entry would have obviously been this week on the 15th of August, but for the more conservative, if you're waiting for higher confirmation about resistance, because there is quite a bit of resistance around here, it's only just started breaking through all of that, and you probably could even wind it back a bit. So, it's probably early days for it, but the key is actually when do you get in for these type of stocks? If you look at its history, it hasn't spent a lot of time going up in all of these years. In almost 20 years. Most of the time it's been trading sideways or going down, which...
Well, that's sort of what I was just saying, wasn't it?
Yeah, and it is. It's something to watch out for in these stocks. When they make those breaks through these critical levels, it can be a change in the stock, or it could just be that it's repeating a pattern of the past. But you wouldn't scoff at a repeat of this, would you? I mean, there's 550% when it took off up here. If this is the same sort of thing, and it heads towards a similar sort of level, it's still got heaps of upside from that point there. The question is, will it just do it in the same way? And already it's showing signs of something completely different to what it's done in the past, which is actually really healthy.
Yeah, and I think what is maybe different, or definitely different this time, is the gold price. The gold price over the last couple of years is in an exorbitant bull run, which we have not seen for 20 or 30 years.
I know, but sort of you look at that and you think there's a lot more to it. And this is why investors need to read the story behind these smaller stocks, because, we're talking about a huge price tag for gold right now, but it's not trading up where it was in 2020 when, COVID hit and everyone was fearful. It's not trading where it was back here in 2013 yet. So what else is the dynamics around this particular stock? That's the thing to really look at.
Yeah, individual stock operations. How profitable are they? How well do they run their business?
I mean, right now though, given it's broken through for 2 months, if you weren't in it, you probably could wait to see if it does a retest of that level, maybe a little bit of a consolidation temporarily, as in, the market looks at and says, are we going to see a bit of a consolidation now that the whole situation in the Middle East is settling down temporarily, and we may see it go sideways a little bit, which may give anyone who's missed out on these runs an opportunity to get in.
I love what you're talking about at the moment. We get asked all of the time, how do I get started in the stock market? I'm interested in stocks, but what do I need to do? I can get in, but I don't know where to sell. How do I find stocks? And many more. Those questions coming through to us either on our YouTube channel or via emails. This book answers all of that plus a truckload more. So if you're unsure about the market and how to really profit from stocks, then get this book. It's for free. All you got to do is pay the shipping. There's a link in the description below. As I said, the book is free. You've just got to pay the shipping. So click on the link and check it out and get your copy and find out how to actually become more profitable in the market. Now I'm going to go back to Phil because we got one more stock, haven't we?
We
in this
do.
First bit?
Yes, we do. All right, let's get to it. Bellevue Gold is the stock. Now, this one is probably better known than some of the others. It's a high-grade Western Australia producer, which is great.
Which is also in Australia, Phil.
Yes, in the nice part of Australia as well. And I mean, just on the monthly chart alone, you can see this one, different to Newmont, different to some of the bigger players. It's coming off a significant pullback. And where it's come to meet that support is quite important because we've gone down to this level here, around 82 cents, which in the past has been a level of solid price agreements back in 2021 and 2022. So we've seen sharp buying. I mean, we haven't seen this kind of buying for a very long time. We've cleared this gap through here on the monthly chart, and we've started to break through this level, which has been holding the stock up. So I think we're at the early stages of a potential significant turnaround, and that's quite bullish about this stock. Is today the best opportunity? Well, given the way it's run for that 6 or 7 weeks, I think as markets do pull back, you might find another one. But again, just depends on your time frame. Bear in mind also big volume coming through. The last time it came through was just prior to the big run in 2017. So all things are signing to a bit of a reversal here. Keep a close eye on it.
I like this one at the moment. It does look really good, actually. I mean, the others have taken off like a rocket because they're smaller. But I do like this one. Any words from you, Janine?
I mean, are we going to see in this space a run of anything that looks like a gold stock? Because people will be speculating on it hugely. And therefore, will it be another bubble that's created? And like a tech boom, there's not. Some companies will have nothing much to back it.
It could be, because it's like a snowballing effect, because obviously it's gold taking off, people more. I mean, I only saw a news report only a week ago where everybody's going into all the gold places and buying gold, like Perth Mint, and lines of people buying more and more physical gold. So it's sort of, is this like a tulip mania again type thing, which is what you're suggesting is eventually everybody's bought it, then what has to happen?
We know the story there.
We know the story there. We know the outcomes were actually going to happen anyway. But hang on, later on, we're going to have a free offer for you. So make sure you keep watching the show because we will have that free offer shortly. But anyway, that wraps up our first 4 picks. But don't go anywhere because if you thought those stocks were good, Then you're in for a treat when we get into the next lot right after our trending topic this week, which is, Janine?
Well, thank you very much. Now, it's a big one. You must keep your finger on the pulse of this sector as it determines your future wealth. Now, in more ways than one. Now, it's all about banks. We love them. Sometimes we hate them. ANZ CEO Nuno Matos has made some bold announcements, but can he turn ANZ from underachiever to the top performing ASX bank? Well, before we share our view on the future price growth of ANZ shares and compare them to the top bank CBA, there's this. ANZ's shock and awe plan, a bold experiment. Nuno Matos is determined to change a bank that has become sprawling and complacent. His sweeping plan has major implications for Australian banks, but can he deliver? Now, part of his plan is...
ANZ has just culled thousands of Aussie jobs, but the razor's still out. Here's Tim McMillan with Money Talks.
Hello, new ANZ Chief Nuno Matos wants to turn the bank into a home loan and business banking powerhouse. And despite culling 3,500 jobs in recent times, he says he's not done yet with cost cutting.
ANZ also plans to conclude the remaining 40% of a $2 billion buyback, deliver $800 million in cost savings, deliver 12% return on tangible equity by 2028, quit non-core businesses and beef up mortgage lending. Well, that all remains to be seen. And at this point of the cycle, there's a big question. Let's take a look at the charts.
All right, so what are you going to bring up first, ANZ or CBA?
Let's have a look at ANZ first. I mean, it's been on a tear. If we look at the chart, we've seen this huge rise. Now, it's interesting because we had Zoran on the show and he talked about this as being a hot stock tip right before all of this news came out, which is perfect timing, and it's taken off. We've been saying for a while that ANZ was the underperforming bank. We just needed to see some change or something. But my big concern with ANZ, I guess at this point, is the timing of these changes. ANZ seems to have this knack of making changes right before the end of a big bull run in the market. You know, and then we believe that we're 2 to 3 years out of the peak of the big bull run. And if that's the case, he's projecting that ANZ's going to make all of these changes within that time. I hope it's going to make ANZ a leaner machine. That's the real...
Looks like
should be the,
getting rid of
it
people.
does look like it, yeah.
Was it $12 billion or something in costs or whatever it is? And
that's right.
non-core business is gone.
Yep, stopping the buyback for now because they've got better opportunities to use that money in other ways. So, look, it's positive in that sense, but will ANZ be ahead of the curve when the crunch occurs? We know that historically, if we look back to the GFC, that the banks actually were down slightly more than the overall market. So the market was down around 55%, but banks typically fell more than that, just about 60 or 60 odd percent.
Okay.
So will ANZ actually be ahead of the curve when the market picks up again?
Well, they've got to be concentrating on what makes them the most money, and it's not necessarily lending.
Yeah. Well, if we go back to the chart now, we can see that ANZ's not far from that all-time high there, which we think it's going to crack that and push through. I believe the market's likely to go up, given the way things are at the moment. It's a high probability we could see it continue up into early November. And I noticed that Trump made an announcement of something, that there's a deadline by the 1st of November. And I thought that's pretty perfect in the timing there. But if we look at the rise through here, we could see ANZ crack that $40 mark, I think, quite easily. So it looks really positive for ANZ going into 2026.
All right, so we're going to compare that now with CBA, yeah?
That's right.
Which has been falling a little bit the last...
So before we do that, I just want to have a quick look at what that means in percentage terms for those of you a bit lazy and don't want to do the math in your head. That's 11% gain. I think that ANZ could actually go slightly higher. If we go to CBA and see what CBA is likely to do, I think seeing CBA's having this pullback currently, it could come back slightly further. Let's just give it the benefit of the doubt and say $60 in the short term, but could go lower. We're talking much greater multiples on CBA, even though it's been the most bullish stock on our market. So that's something to really weigh up and consider.
I know there's talk in the market, I suppose, if I can use that word in general, that the Australian market is trading at really high multiples at the moment. And I know a lot of people are worried about that, thinking the stock market's going to crash because of where it is. I just want to, on CBA especially, because it's the best bank in Australia, obviously it's trading at all-time record, had been till recently trading at all-time record levels. How far can it go?
Well, you wouldn't put a cap on it, that's all I'll say. It's possible, given the way that it's unfolding at the moment.
That wasn't an answer, was it?
We could see a little bit of downside. I thought I already made it clear on a chart. How much more do I need to show?
Well, a lot, because our viewers, you guys want a lot, so I'm trying to get it for you. So, okay, so it's going to go past its previous high of $160 odd.
Ideally, if CBA comes back further, they're going to make more.
All right, cool, all right. Anyway, well, if you do want the skills to analyse stocks just like you've seen tonight, visit our website, wealthwithin.com.au. But now let's get back into our topic and get into some more stocks. I'm going to start out with you, Phil.
All right, let's go to the charts. We've got Perseus Mining now. This is one obviously well known to the market. It's a West African multi-mine producer. There's a lot of good producers out of West Africa, Australian stocks. That's a side note. But we have seen this one take off significantly. And again, for me, it's so crucial why you need to be, having plans on these kinds of stocks, watching the price action, getting your best opportunities when they come. To me, the best opportunity for Perseus was a few months back, the most recent one, once it took off from this recent pullback. Now we're coming into 5, 6, maybe 7 weeks up. And I think, with the nature of this kind of move, when I see a stock like this that's almost parabolic, that's had significant runs up, you go through history and you just measure the rate of rise. If I can get one of our momentum lines through here, that had been quite a sustainable trend throughout history. We go back and we push it. If I can grab my mouse, is not working today. That's great news. But the other run where I guess we followed a significant pullback was back through this period in 03 to 07. That sharp rise, we didn't see that through there. So now we measure where we're at today, and we're going even sharper than the most sharpest rise on our market, or for this stock. So looking at this, it then becomes, what kind of opportunity is this now? For me, it becomes a trading opportunity, short-term trading opportunity, not a long-term big buy opportunity right now at these levels. So I'll treat it as such, find the trades that are going to present themselves in the short to medium term. Yes, we're in the trend, so follow the trend while it's available, but look for those good opportunities so you can at least get the most out of the market. It's so underrated about, a stock's in a good trend, but you can have a stock in a great bull market and still have a losing trade.
Yes.
It doesn't matter, how good or bad the market is. It's how you get in and get out. And we show a lot on this show about how to buy stocks, but the key, which we don't show, is how to sell well. And we teach that. We're very good at that. And so get that right if you're going to play these kinds of moves once they're extended, because you're playing trend and momentum. So you need to know how to get out and keep that the momentum that you capture.
But you are so right. I mean, we get so many people saying, can you have a look at this stock, have a look at that stock for us? And they've bought the stock, but then they have no idea how to manage it or where to get out. And that's the key. You don't get money in your bank account until you know how to sell. And what we see is people coming to us, whether it's phone calls and emails that the team get. I'm talking to my guys all the time, or our guys all the time. And they're going, oh, this person lost this much money, or they lost that much profit, and they're not profitable because they're not selling at the right time, which is so critical. So I think it's really important to know that.
And conversely, I spoke to a guy the other day that came in, a graduate student, and he's doubled his super.
Yes.
And it's because the key difference was him identifying, hey, I never knew how to sell right.
Yeah, he's done that in the last 12, 18 months, I think.
Yeah, 12 months. And that was the big difference, keeping it. Because it doesn't matter if it's there on paper. If you can't keep it.
Yeah. All right, Janine, let's get into the next stock. I'm looking forward to this one.
All right, the next one's interesting. It's a ripper, but it's a really small one. So for those who like those microcap stocks, we're looking at one that's just taken off here, and that looks beautiful. It's at a resistance level right now, 1, 2, 3, 4, 5 times it's stopped there. Look, it's pulling back right now, so that looks really nice. We want to see the stock challenge those levels and to give you an opportunity to get in at the smart money. So this one has gold and silver, and I'm still not going to say those names.
On a winter at Mount Poppy Wines. There you go.
It's crucial, the silver as well, because silver's flying also.
It is.
Side note.
Yeah,
but this looks like really early days. I mean, I can see a classic formation that's on the left-hand side of the chart, and some of our traders would understand what that is. And it looks like there's a potential for this one to go all the way up into the 30s, which would be huge. But it's about being patient, right? So given the risks with this stock, and the risks are significant because of the value of it. People think, oh, it's only 7 cents. I'm going to buy stocks that are 7 cents because they're cheap. Oh, no. I mean, you look at that in 1 week, it wouldn't surprise me if it came back 35% in 1 week to give away all of what it just made. So you could be on it thinking that you've made a lot of money, but then it gets wiped out the second half of the week.
I mean, that last bar on the chart, when you just put that on, that's this week, which is Monday starter. That's it. It's 1 day starter. So somebody bought this stock at 10 cents and it's now trading at 7. So somebody bought yesterday and it's down 30% on their money.
Yeah, that's right.
That's what you're talking about,
That's
isn't
what
it?
I'm talking about.
So they haven't bought it at the right time. They've bought it with FOMO probably, and now they're sitting on a 30% loss in 24 hours, basically.
Yep. But all is not lost at this stage because of the momentum that it's got behind it. It's just a question of, where you've set your stop loss, and you should have a good one. But with these types of stocks, like Phil was saying, you've got to be in there buying at the right time. He's not going to buy that previous stock that he looked at right then and there. He recognises that it's a trading opportunity, same as this one here, short-term trading opportunity. But it's setting up for us still, and this is a huge opportunity, I think.
All right. Now, Phil, take us to the next one.
All right, next we have Kalamazoo. These are some great names.
Kalamazoo
I'm glad I did read that one.
Resources far out.
You guys would fail. You'd fail your news presenters course.
Oh, yeah.
You can't say these names.
I reckon these guys get out there and they've probably had a few drinks and they've found the claim and they're thinking, oh, yeah, this sounds good. Why don't we call it
We'll just make a word up.
Make it difficult, yeah.
Just as they stumble over the
All right, let's
log.
get to the chart. This one's an early stage, small scale producer, and right now we're seeing movement. That's the important bit. We're seeing the biggest volume we've seen in history come through. That's exciting. Last time we saw that was out of this major low through here where we found some accumulation later. This is giving those typical patterns. Again, things we do teach in terms of identifying the big picture. And I think it's important. People often are looking so much to get an opportunity or how can I get into this stock, regardless of what, if they do have rules, great. If they don't, but put that into context. Identify where the stock is first. Do the big picture analysis. See if that opportunity's got legs to run based on where things are. And you can do that when you look at a chart and you identify the phases that the stock's in. This is very textbook what's happening right now, and it's expected that it's going to break out. The way it's broken out, I think it'd be nice to see a bit of a pullback, to be honest, because we've just broken out of that sideways congestion. We've taken out these highs here, which is quite nice, but big volume. Again, it's about lining up and getting that right risk-reward strategy. But we've broken out, so one to definitely put on your list.
I actually like this one. I think it's looking good. I mean, you can see how beautifully it runs when it runs.
Oh, yeah.
So if you get the right entry, then you can make sure you're into profit all the time rather than taking that high-risk trade. So you've got another one, Janine?
Oh, lucky last. This one is called Santana Minerals, a normal name. That's nice to see. I already like it. And it's getting close to that dollar mark. We can see that's had this consolidation here. It seems to go up, consolidate, move up, consolidate. That's what we like to see, this nice trending action happening. It's a bit more volatile given the liquidity of it, yes, but look at that volume that's come in. We've seen since around December 2023, November, December. So it's for 2 years, it's had much better volume, which is really good in supporting traders who want to be able to get some action on this. Looking at historical moves, and I'd have to do full analysis to see where the critical levels are. And you know what? It becomes even more important to do the full price analysis on these type of stocks because of the volatility. You could think that this stock like this is going to get up to 160, where it has before, but there may actually be a much stronger level for it somewhere else on the chart that you're not aware of at all and you're running blind. So that's what we take away. We actually take away we actually give you glasses, I guess, to see differently.
Crystal ball.
Yeah, crystal ball. What about bionic glasses? You can see through walls. Anyway, forget
Crystal
it.
b's fine.
Too busy thinking about something I shouldn't be. All right, so let's just say that we're talking about crystal balls instead. If we're looking at a break through this level, which it's already started to do, we could see some further significant upside through that dollar mark, possibly even 120. could be a really good level for this stock to aim for. I like it. I think a little bit more consolidation here, a rise through that high, it would look nice.
I'm going to ask you a question before we move on. Often we see comments from people saying, oh, this miner's blah, 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 why would you look at it? You know, it's this cost of this, it's doing that, China's doing this, whatever that is, and we see these comments. Do they concern you when you're looking at the chart and what you want to buy? Who wants to answer that?
Phil's going to talk longer than I will. Do you want the short answer?
I just want an answer.
The answer is no, not to get focused on that at all. Because, I mean, when we're talking about gold, there's a much bigger global picture in terms of the demand of gold than just talking about what's going on with China. So if things escalate, then, of course, around the world, then there's going to be a higher acceleration in the gold price, which could support these shares. But even so, if the gold price hovers around or even falls 20%, nobody's going to lose sleep over that. And it's not going to...
I think I've got a simpler answer.
You got a simpler answer.
Don't try to predict the market, just follow it.
Just follow the market, yeah. Look at the stock and what it's doing and then follow that.
Hang on, that's what we do all the time, predict the market. What are you talking about? Don't try to predict what China will do or what Trump will do.
Well, yeah, having that mindset of trying to look at the fundamentals and go, okay, I think this is what's going to happen next to the world.
Yeah.
Price action will tell you what's going to happen next. You don't need to be a genius, but you need to be good at following what's happening.
No, but I saw a comment on our YouTube channel this morning from yesterday's video that you did, and somebody saying, you know, you guys are ramping stocks. And I went, no, we just pick good stocks.
Yeah.
Because we're seeing the chart, we're picking the right stocks. That's what I'm saying.
Yeah, so they don't understand that there are triggers and things on the chart.
Correct.
And we can see that happening, and then other people are buying them because there's momentum behind them.
Ramping them means we own them and we're trying to push them, and
That's
we don't.
right.
Yeah. We're just seeing stocks that are about to take off, and that's the beauty of technical analysis, that what we teach in our courses, we can teach you when to buy at the right time, just before these moves are happening, and we're seeing it constantly on this show. They're hot stock tips, you know, and we can go through bucket
like just looking at the chart of this particular one, Santana, if you look at some of these patterns, people are looking at the price and they're thinking, oh, it's got cheaper, I might buy it soon, but then they can't see that the safer time to buy it is when it starts edging up and breaks out, and that's what you're talking about. So the stock breaks out, and they're thinking, well, how did that happen? You know, did someone push it up? But there are all sorts of buyers out there starting to see the price accelerate, and they're jumping on board.
They're the FOMO.
Yeah.
Yeah, we're saying the opposite. I was only talking about this yesterday with an expert that I was interviewing for Talking Wealth. And I was saying, you know, you've got to do the Warren Buffett stuff, buying doom, selling boom, not the opposite way. If it's already boom, then you're getting in on FOMO, and you're likely to make some mistakes. But anyway, moving on, shortly we have one of Australia's biggest uranium players coming out with some headline news today, which could have massive implications for the stock's next rise. Now, you don't want to miss this one. But first, let's answer your questions. Now, Aravinda writes, I am trading with small capital. Tried scalping, swing and options buying in US stocks and lost significant capital. I've completely moved to ASX stocks in the last week of September. Nevertheless, I am following your videos now and entirely focused on position trading on weekly charts of ASX stocks. And my question is, what is your opinion on VR1? Well, my first answer is buy the book. It'll tell you how to do all of that stuff. Because I think what he's done, Rinda, if I said that right, his name right, is you've fallen into the same trap as everybody does, hasn't he?
Still not solved this problem.
It still hasn't solved your problem. Doesn't matter whether it's ASX stocks or US stocks or whatever else. The problem is education first, and then you'll be able to trade the stocks doing that right. So I'm going to let you answer it, Phil.
Yeah.
So you'll bring up stock and have a look at it. But
I will.
You're right, but he has just fallen into the same trap as everybody else.
Well, it's quite common that traders, if they don't find success in one area, they'll go to another area thinking the area is the problem. But
Yeah,
no, you need to know how to, as we said earlier, buy and sell correctly. So I would say the best advice I can give you is go and get the book, but better go and do the course, because you want to learn how to sell right so that you can do this thing properly. Skipping through instruments is not the answer. But anyway, let's get to...
It's not about the... Sorry, I would stop you first because it's not about how much he's trading, because he said he's trading with a small amount. So I understand...
Yeah, that too.
He's trying to, find small stocks probably because he thinks they're cheap and he's going to get more and he'll make more money. But it's more about... It doesn't matter where $1,000 to him could be a massive amount of money, where, $1,000 to me is just nothing. I can, throw that away. It's just relative to the person.
But it means
yeah.
it also means the same thing. Whether you buy $1,000 worth of BHP or $1,000 worth of this stock VR1, you're still risking $1,000 or 100 or 50.
Or 50.
So,
Correct.
yeah.
All right, so let's have a look at the chart.
All right. So right now, I mean, look, I don't mind the stock, to be honest. With all that said,
He's picked a good stock.
yeah. But again, the key will be how do you sell when you buy, because it is very volatile. So, for example, you know, if you're one of those, you've looked at this, there's been big news come out, you've seen an opportunity, it's gone up 40, 50% or 100 in September, and you've thought, you know what, that looks good to me. The news is great, the fundamentals look good. Obviously, all the stories are going to print now once it's already up, like we've seen with Drone Shield and that. And then you get a big flip reversal all the way back down through here. One with no rules. Will you be able to stomach that kind of loss? Through history says you don't, or you might hold it all the way back down to this level through here. So what's key with these kinds of volatile stocks is getting in right and getting out right. I think I've stressed it enough tonight, but I can't. Even more with this kind of stock. And right now, is there an opportunity to get in today? For me, the answer is no.
No, I wouldn't.
You've got to wait. So the opportunity came before, back in August. And right now, today, I don't see one. In fact, there is an opportunity potentially to get out now. So that's the best advice.
To me, the answer to his question, you're on the right track with the answer to the question, because the question is, he needs the education first. But what you've got to learn to do is to trade profitably first, and then expand out from that into whatever it is, whether it's lower cap stocks or whether it's options or something else, or US markets, whatever that is. But it's about getting the right strategy and the process right first, right buy and sell rules, right money management rules, all of those sorts of things. Get all that right first, and you do that on the best stocks on the marketplace, because they're not going to lose a lot of money for you, which you already have done. So to me, it's really much about getting the rules in the book that I've just showed you. It's free, just got to pay the shipping. The link's in the description below. But get the process right, and then go from there and look at the different stocks, because a lot of people just think, oh, I'll just find the lowest cap stocks or the cheapest stocks and try and buy them. But you've got to back to front, learn how to do it first, and then expand out from all of that. Anything else you want to add quickly, Janine?
No, I mean,
Other
than it's ego often that does this, you know, puts people in this position. Because, you know, they can give all the excuses all they like, but we eliminate any issues. So you can't say it's money, because there are so many options to get in if you don't have the funds. You can't say that it's time, because people do have the time. Even people who are on mine sites are doing it. People with, you know, women with children are doing it. Babies have just had babies, and we've had ladies come through who have done it. So, you know, I don't think there are any excuses really, are there?
Yep. As Mr. Buffett says, the best investment you can make is in your own education. And anyway, next is Adam's email. And he said, would love to know what you think of TMG. At the moment, it might be a bit overextended. I bought it at 6 cents, and in that time, the company has positioned itself as a key critical minerals play in both Australia and the USA. Now, I'm going to go to TMG for you, Janine.
Okay, now, if I put this chart up to someone who knew nothing about the stock market, what do you think they're going to say? What do I think of it?
Oh, I think overextended is a bit of an understatement.
I think
it's somebody who doesn't know anything about the stock market.
I think if you own it, it's bloody fantastic, if I can use that word. If you don't own it, then it's probably high risk right now, given that it's just sitting at that all-time high. So I would say not one for the faint-hearted either. And if you don't have the experience. So there'll be people sitting in this who have absolutely no idea how they're going to get out of it if the stock falls.
I think that's where the question... He's bought it in at 6 cents and he's asking us what we think of it. So he's made a lot of money on it. It's gone vertical. So I can pretty much guess, Adam, you're sitting there thinking like, I want to protect my profit. Now what do I do? Is it going to keep going up? Or how do I get out of it? And I think that's probably the key question that we've got. And at the moment, you've just got to draw a line in the sand of how far it's got to fall before you get out of it. Not just guess at it. But any hints that you want to give him, Phil, before we move on?
It all comes back to the chart. It all comes back to the chart, and you know, without it's a big question to answer it in terms of how to do it. But I mean, just looking at the nature of price action here alone, you look at how these bars are so strong. We've had big closes, buyers are willing. This week we've seen the opposite. Markets reverse so far. We've come into a key level, the all-time high. So I'd be mindful of when we get to new levels. But again, you know, there's more to it than just
so it
that.
may not have stopped rising, but it may be falling. So we sort of can't. it's hard to tell you what to do right here because obviously you need rules around the selling. But as I said, buy my book too. You probably need that. Anyway, are you looking for the next big thing on the ASX? That one stock that could shoot the lights out? Then don't miss your chance to uncover a hidden gem, high-value microcap company at the 14th Annual Australian Microcap Investment Conference. Now, we're giving you a chance to attend for free. It's on at the Sofitel Hotel in Melbourne on Tuesday, October 21st, and Wednesday, October 22nd. And we've got 15 free tickets just for Wealth Within students and graduates. So if you're in Melbourne and available on those dates and want to attend, email now with the subject line Australian Microcap Conference 2025, and the first 15 will get in free, so don't wait. Email now to info@wealthwithin.com.au as tickets will go fast. Now, Phil and I will also be there, so you can come and say good day. That's next Tuesday and Wednesday. I'm looking forward to it. There's some real ripper companies.
Oh, yeah.
And, you know, I was only chatting to the organisers the other day and they said about 40% of companies that present, their share price goes skyrocketing afterwards. So it's worth, and the tickets are like worth $500-600.
Yeah.
So this is a really good giveaway, guys. So if you are a student or graduate, email info@wealthwithin.com.au now.
Plus they'll get to meet you in person.
I think it's better
That's
for Phil.
probably worth it.
You get to meet Phil. Janine won't be there, so she's got other stuff to do. But anyway, next is Natasha's email, and she writes, thanks for a fabulous show, and I completed the diploma last year, which I thoroughly recommend. My question relates to Navigator Global, which I am looking to purchase if it breaks out of the current sideways move around $2.30 with a stop loss of $2. I'm happy with this plan, except when I looked into the fundamentals. The EPS going forward is estimated to decline by 6% per year. How much do I take this into consideration? On another note, I heard you say that Janine did a podcast on TLX, which I've looked for but can't find. I'm very interested in this stock, so any tips to find this would be appreciated. Now, I've got to go to you because you obviously... Did you do a podcast on TLX?
I did.
When?
Would have been probably a couple of weeks ago.
About 2 weeks ago, so it'll be in the last 3 or 4
Depends
months.
when they put it up. Might have been 4 weeks ago, actually.
Just go to our webpage, wealthwithin.com.au, and go into the media section or down one of the tabs on the right, and you'll see the podcast in there, and you just be able to scroll down to the last few. It'll be there, and just listen to Janine's voice, and you'll find that podcast. But now, okay, so I'm going to go into her stock.
Yeah, now this is an interesting stock, actually. Look at the long-term picture for this one on the chart on the left-hand side. You can see that there's this amazing pattern that's unfolded. Now, our advanced students will be looking at that, sizing it up and working out where exactly this stock is in the big picture sense. And it looks like it's in the infancy in the next run that could occur for this stock. So that's really one tick I would give it straight away. Next thing is it's obviously above $1. And not only that, it's actually got support at around that level, which to me is significant as well. So I look at that and I think, yep, there's another tick there. Looking at the volume's gone up in recent weeks. So the volume was actually rising, supporting that. It's just sort of come off quite a touch now because it's having that consolidation. Stop loss at $2, great, there's a tick. I like the fact that you've got the stop loss where you've got it. How much are you willing to risk? I guess that's really the question you've got to look at, and not just in terms of a percentage. It's got to be the dollar amount that you size up and decide whether that really is something that you're congruent with. Because if you trade and you're trading with positions that are bigger than your psychology is going to handle, it will create issues for your psychology going forward. So you just want to best do the right thing. Now, that's what we teach students to do and prepare them for the market in more ways than one. So looking at that chart, you can see there the buy price that she's talking about. I do like that potential point of entry, but I'd need an entry rule to be triggered, right? So I'm not going to go into the specific entry rule on the show, but in principle, I like what you're doing here. It's got a few ticks. Okay,
now we didn't answer your EPS question, but there's only a little bit. It's declining by 6%. You'll probably find that will change if the stock goes off keeps going up in a bull run. Anyway, now we have Christina's email. I was quite impressed by last week's analysis on Q4 growth stocks in the tech sector, such as data center stocks, DGT and NXT. Has your view on these stocks trends changed after Trump's latest tariff threat to China triggered a big sell-off in the US tech sector? I've not bought these stocks yet and plan to enter before Q4 growth takes off. My strategy is for the medium term, 6 to 12 months. What do you reckon? Can you answer that one, Phil?
I can. And what if tomorrow Trump reneges on his tariff threat like he has in the past? I mean, what we're talking about here is, and we've seen the US market recover quite strongly overnight with him toning down on what he said initially. So I think if you're going to be using Trump's tweets to identify trading opportunities, you're playing behind the eight ball. You're playing the game, you're reacting to the game, whereas what is important is it's what you think about the market, and then it's what the market thinks about the market. And price action tells you what the market thinks about the market. That's the most important stuff. So for me, I'd stay away from all of that, I guess, information coming through, because it can change tomorrow and it can change quick. But if the opportunity presents on these tech stocks, which it has in the past, they've come off a nice pullback, they're back up again, look at those opportunities from a risk to reward scenario.
Well, I think you also need to look at it as the tech sector in the US is completely different than the tech sector here in Australia. Like the tech sector in the US, you know, Nvidias, your Microsofts, your Apples, those people, AMDs, all of those, they make up the big chunk of the S&P 500. They're massive. I think it's 40-something% now of the S&P 500 is 10 stocks, and they're all tech stocks. Whereas tech stocks in Australia, what, 2-3% of our market, max? And our big stocks are banks or finance and mining, BHPs, your Rios, that sort of stuff. Completely different market. So I agree with you, Phil. I think it's a whole different ballgame.
Yeah.
Look at what's happening here in Australia, because it was all about data centres and growth in AI and everything else. So I wouldn't pay any attention to Trump, because, as I agree with you, it's just reaction. Anyway, Raj he sent us an email. It's next, and he said, I would appreciate your opinion on CTM. I bought it 3 weeks ago at 46 cents. It is in a medium-term uptrend, and I have a trend line under it as well. I think it will do well in the medium term. I'll let you take this one for Raj.
Okay, Raj. Shall I let you down lightly here? I think that you're really optimistic at this point about this one, but something could go in your favour to the upside. First of all, let's look at the history of this stock. It's not pretty. It's had a lot of volatility and challenges. It's really been what I would call a bottom dweller. Now, that doesn't mean that there's no opportunity there, but generally what we like to see is consolidations over a time, but not over nearly all of its history, you know, over the bottom. Often that means that they can end up going broke. But one little light at the tunnel is this consolidation that we're seeing now. I mean, that is the hopeful point here and could be the game changer. This stock could move up to my dollar mark reasonably quickly if it does continue to break to the upside from here. Now, if conversely, on the other side, we see it fall back below these lows here, forget about it. Don't hold out hope thinking that it's going to be, you know, one day change. And this is where a lot of people make the mistake. They try to buy into these volatile stocks without experience, as Phil and Dale were talking about before. And then because they don't know how to sell, they're left with the, you know, with a dud, basically, something that's going to really sap their psychology and sap their bank account. And so the idea is to only be in these sorts of stocks when they're moving in the direction that you want them to be. So let's just look at when that is. So you've already got a buy. So you've bought it already. I don't mind the actual entry that you've picked on it. I think that's okay. But I think once it actually gets above these levels here, up around sort of 55 cents, that's when the truth is going to be there in this stock and whether it's got enough to keep the, you know, the momentum going. But I think it's a little bit early just look at that monthly chart. Just understand that you can look at that chart even with a little bit of experience and a bit of knowledge and say, is it going up yet? And if you hesitate and say, well, I don't know, then that's going to tell you half the story, isn't it?
Well, he said he's got a trend line underneath it. So that's one thing he's got. But then I'm going to ask you, Phil, because you're used to trading short term, which I think that's probably what he's trying to do with this stock. Would you use a trend line on this stock?
Look, I think more than anything, this stock here, it's good that he's got a rule. That's the first part. But more than anything, with this end of the market, when you look at the way this stock has unfolded, the key thing Janine said was You go back over 20 years of history and it's dwelled around the bottoms. Now you converse that to the higher end stocks on our market, strong companies, they get share price appreciation through not only performing as a company, but the weight of money going through, the flow getting in by the big funds, the big indexes, whatnot. You don't see that type of price action here. So something drastic has to happen for that company to either start getting profitable or to either start getting that support to support that share price appreciation. If you've never seen it in 20 years, your bet right now is a long shot that something's about to change for that whole scenario to change long term. So yes, I think if you're going to treat it as short-term trading opportunity, fine, but you're dealing with price action right here that really has no stability or support. It's speculation, which lends itself to wild price swings. And to try to trade that, I'm old enough now, I'm not young anymore, and why make your job hard, man?
But that's true, isn't it? It's like people make their job so hard on the stock market. I was thinking just before we came in the studio, I'm thinking like, if you had the choice, would you make your trading harder or simpler? If you had the choice, would you make your trading more profitable or less profitable? If you had the choice, would you make less trades and make more money, or more trades and less money? What would you choose?
And if you had the choice, would you be uneducated or educated? Be educated.
And everything says get educated and do everything else. But what we see every week is people making it harder, choosing the wrong stocks, not having stop losses, not having proper rules, and buying very, very low. Like every stock we've looked at so far from a question has all been pretty much low cap stocks.
Yeah.
Why?
Humans find it hard to simplify things, I think, in life.
Make your job easy. And I thought that was a really great statement. Anyway, now's the time for our hot stock tip for the week. I'm going to let you take that one away, Phil.
All right, so the hot stock tip this week is Paladin Energy. Now, before we get to the chart, take a look at this news that came out today. Now, Paladin released its Q3 production results, which were strong. They reported production from its Langer Heinrich mine up 7% quarter on quarter, marking its strongest quarter since restarting operations. Now, the company also is sitting on solid cash reserves after a major capital raise, and its Canadian project just passed a key review lowering risk. Now, overall production's up. Projects are on track and Paladin is in great shape heading into the next quarter. So let's get to the good stuff, which is the chart. And I'll bring that up right now on your screen. With Paladin, we are seeing some price movement, which is quite interesting. Again, one of these stocks that when I go big picture on the monthly chart, it's very evident. We've had that expansion phase. We've gone into contraction. Very typical of what you see with stocks when they're ready to break out into their new expansion, big accumulation, and we're starting to find higher bases in price. I like the fact that we've come back and tested this level through here where we had price agreements and now starting to rise. If we hadn't done that, I'd be more, bearish on where things are likely to go next. But the fact that we've started to see buying through here and we've broken through some major momentum that had been holding the stock up for a little while, finding a test, that is a key level, $6.30. As long as we hold there, I think we're still bullish. Getting that nice expansion now. Unlike some of those other gold players that had already run, I can say that this one could potentially lend itself to an opportunity right now without getting into the specifics of it. That's why I think it's coming off a reversal, nice risk reward at these levels. And by the sounds of it, the company's, turning the corner, getting bigger. And uranium is a space, that, as we know.
We know Janine's never going to buy it.
No, but it's finding, if we just go back to that chart real quick, it's finding solid higher legs and being supported. The buys are coming through. And the biggest part of all of it is it's on big volume.
I might just buy it just to annoy Janine.
She hasn't got her gloves under the desk, so we're safe. We're not getting punched.
I might do that. But it looks really good, doesn't it?
Yeah.
It looks like an awesome one. I'm not going to ask you, Janine, because you'll just say it's uranium.
And more than anything, regardless of the industry, it's what we've spoken about all night tonight, getting that really nice risk-reward scenario based on price. That's going to get you that outperformance.
But this is a far better stock than a lot of ones we've seen tonight.
Oh, yeah, big stock too.
Yeah, really big stock and looking really, really good. And that's what Phil was talking about before about getting the right stocks, getting in, getting out, making sure you understand what you're doing with that. And I think that's a great hot stock tip. So thank you for that. And thanks, Janine, for your comments tonight. If you do want more from us, then check out our video, Biggest ASX Growth Stocks to Buy in Q4.